This is CGTN, China Global Television Network.
On today's World Insight, China eases COVID travel restrictions and pivots to the economy. Can China's opening revitalize its own economy and those around the world? Here is our host, Tian Wei.
Hello and welcome to World Insight with me, Tian Wei. Today we are continue our special series looking ahead at 2023 recovery and relinking. As China buckles down to its optimized COVID-19 response, the country lost no time restocking goods and commodities to boost the consumer spending in the year 2023. The three-day New Year holiday rolled in with a strong recovery in tourism, catering and retail sales across the country. The more than 52 million domestic tourist visits during the three-day weekend holiday, up 0.44% year-on-year. In another sign of growing confidence in China's economic recovery, the yuan strengthened to a 4-month high against the US dollar on Tuesday. The Chinese economy has shown resilience, tremendous potential, and great vitality that you can hear from various Chinese ministries that are speaking to the public today. So what can we expect from China's recovery from the earlier 3 years? For answers, let's loop in our panelists. For more on the Chinese economic recovery prospect, we are joined by Bert Hoffman, Director of East Asian Institute at National University of Singapore, former Country Director for China of the World Bank, and Avinash Godbole, Professor and Political Economist in New Delhi. Welcome, sir. In Beijing, Xu Qiang, Assistant Director from the International Monetary Institute at Renmin University of China. Good to see you too. Now, how much can we bring up to date, Mr. Chu, about the economic recovery potential of China from where you are?
China is definitely recovering, and we've been seeing a quick rebound in the consumption and tourism market. According to the statistic of the Authority of the Tourism Department Ministry, we've been finding during the holiday of the New Year, the consumption goes up very quickly. And if you can stay in Beijing and Shanghai and Wuhan, Chengdu and big cities, you see hundreds and thousands of people are getting together to pass the New Year. Yeah. But also we have to see this recovery probably is going to be slower and weaker than we expected because the expectation is very, very high. If you take a look at the 2019's New Year, we find out the consumption is about like 75% of the 2019 New Year Eve. So probably, as the experience told us, Korea, Japan, they have probably more than 5 waves coming after the first opening up. So I think the impact is still going to be there.
Mr. Hoffman, looking from where you are, while following China every day, step by step, what is your assessment of the economic recovery potential and timeline?
I actually think the consumption rebound will be quite strong. The COVID, fortunately or unfortunately, the wave is very intense and very quick. So we're looking at almost sort of the end of the major wave in January or February, early February, and consumption is already recovering. There's a lot of pent-up demand. If you look at the savings balances of households in the bank, they've been saving ever since the start of COVID, and saving much more than usual. Already households in China save a lot. They've saved even more during COVID. And I think that will be released to some extent in the coming year. And so big purchases such as cars and others will be high up the wish list of consumption. The second factor is that the property market seems to be stabilizing. There's a number of measures that the government has taken basically to bring liquidity to the builders who can now finish the buildings that were sort of left hanging during the property crisis. And you see that buying of property has now also started to stabilize. It's still down from before, and probably it will stay down from before. But even if it's still down, if it stabilizes, it means that it's less of a drag on growth. So that's another big factor for growth. The headwinds for China is coming from abroad. Exports used to do really well. First, they were the first one producing, and manufacturing was doing well. Exports was doing tremendously well. That has started to taper off. And in the second half of last year, you already see basically hardly any growth in exports. That will probably carry into the next year because the world economy is not in great shape. Kristalina Georgieva said about 1/3 of the countries will go into recession. I think the big blocks might just escape it. The US probably escapes a recession, in part because inflation is coming down quicker. Europe will touch on a recession, but only very mildly. But nevertheless, exports is not going to do well going forward.
Having said that, though, Professor Gottbole, the international environment is crucial, facing both developing and emerging economies. You are based in India, well observing some potential growth in terms of manufacturing and playing bigger role in global supply chains as a result of the latest changes in years. But how do you see the global environment and the realities emerging economies have to face, including China and India?
Inflation in the West, in the US, and its impact on the rest of the world is going to be a factor in India. One of the biggest sectors in India is also the information technology. That is going to face some significant headwind in this year 2023 because of the inflation and slowing down of demands. As far as India is concerned, we are seeing a significant increase in real estate prices after COVID as people buy bigger houses for themselves or try to have second homes and so on and so forth. But also this pent-up consumption demand in India is quite high. So automobile right now, cars are selling bigger cars. So million rupee plus cars for the first time in India have a bigger share compared to cars below a million rupee. That is a significant benchmark for the Indian economy as well. So these sectors will be doing relatively better. But I'm still waiting to see what impact the inflation has eventually a couple of months down the line by the start of the summer as such. And by the time we know, Indian economy also reflects on the outcomes of the crops. So in monsoon, it's a monsoon crops, and in the winter, it's a winter crops. So again, by March, we will know the nature of output this year, and that will have actually impact on the rural consumption in India, which is much sometimes gets neglected as part of the economy. So we'll have to see, wait and watch until summer on the direction of Indian economy as this year.
Do you see, Professor, just to follow up, since we are more focusing on China's economic growth potential, but do you see that the emerging economies and developing economies can provide some kinds of leeway for emerging economies themselves, such as China's economy, of course, India's economy too?
Yes, intra-developing world trade is important, but as you know, India-China trade itself is subject to India-China political relations and the political and security stability on the border. So that is again a much larger question. But yes, there's a lot that developing countries that can do on cooperation, on technological cooperation, on electrical vehicles, for example. So these sectors are open for progress and cooperation in the future.
One of the crucial things is about consumer confidence. If we see China's economic growth potential. Now, Mr. Hoffman, your thoughts on the latest reality, and as we speak, when the economy recovers, how will Chinese consumer respond and react and lead? We don't know.
You're absolutely right. That's a crucial point. And it was interesting to read in the Central Economic Work Conference report back in December they also recognized that confidence was the crucial factor, actually not just for consumption, but also for investors. Of course, the investors and consumers, they look at different things. For the consumers, I think, first of all, the relief of the change in COVID measures is important. Second, the employment situation is important, and there's a bit of unclarity there. The headline employment situation looks fine, looks back to almost normal. Youth unemployment, though, is still quite high. And I think that will need to start turning to become a stronger confidence factor for the Chinese consumer. Third factor is income, and China's over the past decade, wages have been growing quite rapidly. Last year was, if you want an exception, the wage growth was only about half or less than half of what it has been in the past decade. I think that will turn up again, and that will therefore reinforce the consumer confidence. There's a number of things, though, that the government probably has to add, and one is really the social safety net. Part of the collapse of consumption was because there was not much of a social safety net for migrant workers, and extending the net to migrant workers would help confidence. And the second is the pension system. Really has been driving the very high savings of Chinese households. If the government were to further the reforms on the pension system, that will provide the consumers the confidence that they may need perhaps a bit less savings for their future, and therefore they can consume more. So there's a whole range of factors that go into that confidence, short-term and long-term.
Are those factors being carefully thought about and policies carefully crafted toward providing more confidence? Mr. Chu.
The government is definitely doing so. We've been seeing many subsidies has been issued, coupons for the consumption has been issued, and from the authority of the monetary and also from the fiscal authority, we've been seeing very active signal. They've been mentioning the monetary policy is going to be very, very flexible. Judging the situation, definitely going to be not going to be very tight, but also not like a downpour or like the QE as the market rumored. And also government mentioned that fiscal authority need to work really hard on spending. But what really concerned is that, as Bert just mentioned, yes, we do have 15 trillion yuan worth of is like 2 trillion US dollar worth of the deposits income and the saving. But you have to understand, we take a look at the data, we find out major, like 80% of that argument happened with less than 3% of the family. And also considering probably they're going to be like tens or 20, around 20% of the family, their income is stable, not too many increased and not also reduced that much. So I mean, probably you're looking at 80% of the family or household sector is still losing their deposit. So probably the recovery is going to be slower than we expected.
Yeah, I heard a lot of probably from you, Mr. Chu. Certainly that is the situation as we are monitoring what is going on very closely day by day. Mr. Hoffman, your response to what Mr. Chu suggested?
The underlying element is the income distribution in China. That has been on the agenda. Interesting enough, the Central Economic Work Conference did not talk about common prosperity, but I think there is a building consensus that there should be some more income redistribution through the fiscal system, and that will actually help solidify consumption as a driver of future growth, future demand growth. The second part, and that's the element of the confidence for entrepreneurs, and this is about bringing the right environment for the entrepreneurs and recognize their contribution. Even the platform companies, the Central Economic Work Conference had a couple of good words for them. I think that will feed into the confidence of private entrepreneurs as well, and that will therefore recover private investment. I mean, what has been growing is public investment. Public investment has done well in last year, and that is really driving growth, especially at the very end.
Yeah.
But private investment is as important. That depends also on confidence. I'm more hopeful than a year ago that will recover gradually.
When a lot of economies are thinking about their ways to work with India, due to the latest changes in our world. How do you see, is there a real competition going on between China and India? What does that mean for China's economy, for example? Your perspective, I would be very interested in learning.
India is not the only one that is competing with China. There are other countries. There's Malaysia, there's Vietnam, there's Philippines. There's also Bangladesh, for that matter, which has done well in South Asia for several years now. So I think it's a little early to discuss this question. But yes, the semiconductor manufacturing in India is doing well, is progressing well, rather not doing well. Has started off well. And also we are seeing India just yesterday making significant announcements that the government is going to encourage hydrogen fuel cell research and production as a fuel of the future. And I have some optimistic hope about that as something that will reduce our dependence on carbon and carbon imports. So these are the sectors that should propel research and development and employment in the future as well, which is one of the concerns in India as well. But coming back to China, I am also concerned and curious to know the progress on strategies like dual circulation and what is happening on that and the kind of economic outlook it will have on China and its consumption. India also wants to look at China as a market rather than what the imports being linked, it being a one-way economic flow from China to India. So we'll benefit from a more balanced economic exchanges between India and China in the future as such in the years to come.
Mr. Chu, since you're based in China, would you like to respond to some of the insightful ideas and the clues that Mr. Gokboli just raised?
I think the competition around the Asian region is really, really important because if you go to North America, if you go to Europe, you find out probably the recession. Well, I use a lot of probably because really you cannot see through the fog of the future. But I think into a very large probability, you're going to see recession in North America and Europe in this new year. We're very glad we still have consumption and competition and trade in the Asian region. And it's far away from the center of the geopolitical conflicts. We still have lots of population, good news. And we, in many, many regions, the demographic structure is very young. So in the future, I'm very sure, this is not a probably, I'm very sure in the next 5 years, this is going to be the engine for the world economy to run.
Okay.
For China as well, I am also very confident that even though the recovery is going to be slow in the first place, but if you understand the culture of China, understand the nature of this economy, you're going to see China is going to make the U-turn very quickly than we expected.
Mr. Hoffman, how do you see the shift from the earlier model to now more green focused? Where are we now on this road, given the current economic challenges all over the world?
Look, as all countries that have reached sort of the cusp of higher income, the future growth will be different. And if you look at, there will still be investment, it's still going to be important. Yeah. The next generation to retire has had much more education than the previous one. So it's now becoming quite important that those pension reforms and those retirement age reforms are happening. But the big jump in growth is going to come from productivity increases. And technology is one of them. And China is investing a lot in technology and research and development. But efficiency gains through better operation, increased competition, more markets, new products, that's going to drive a GDP going forward. For that, the famous supply side structural reform agenda in China is very, very important.
When you say supply side reform, how is that going on so far, do you see?
Well, I think there's some progress and there's some setbacks. There has been some progress in the financial sector reform. There's been some progress in competition reform, but at the same time, there's increasing concern amongst both Chinese and foreign investors that there's a more state-driven model, which would probably undermine innovation to some extent, because innovation simply comes from the private sector in all countries in the world, including in China over the past 20, 30 years. So that's going to have to be the big driver. And I think continue to build a good balance between the state and the private sector is going to be crucial for China's growth.
Do you see the Central Economic Work Conference provide at least some clues about where things are likely to happen?
So I think it's a start, and I think it was a good signal. I think it was a necessary signal. I'm waiting for another third plenum of the Central Committee, i.e., traditionally the third plenum is about economic reforms in the medium term, and that would be a great time in which China can signal, all right, so we've been through some difficulties. Now for the next 5 or 10 years, we're going to go in this direction, and we have concrete reforms in all of these areas that people can rely on. Indeed, increasing the confidence of entrepreneurs that the reforms will happen in a direction that will support China's growth.
Mr. Chu, what about your thoughts? What's likely to drive China's economic growth in the future? Of course, we are still managing this year, but this year has to lay the foundation for future growth if we see that is the direction.
Well, I think the Central Conference on Economic Work has pointed out a very clear guideline. You see, upgrade the whole value chain. China has been focusing on the export-oriented economy for too long, but majorly, especially in a very long time after the opening up, we focused on the low value chain. And in the recent 10, especially the 5 years, China refocused on the structural reform in the economy. So we want to climb up the value chain. And that means we can have more value saved in China. Like you have $1,000 Apple phone in China in the past like 20 years, you only have $10 saved in China. In the future, as we have more of the mobile phone makers like Xiaomi, Huawei, probably this ratio is going to be higher and higher. EV and also under new energy and also the consumption-oriented market reform, China has been seeing too much of the income coming from the export sector and later investment sector, but that will cause potentially deflation. And now China want to refocus on the domestic market, which means more of the job will be created domestically. You have to understand China still have 600 million people live in a rural area. Urbanization is going to be one of the direction. And also we're going to create a better market for the local people, and local income will increase. And it's China itself, it's one of the largest market in the whole world. So you can bet on that.
Earlier, I remember Professor Gottbally raised the issue about the local debt. Now, Mr. Chu, since you've been doing research about China's finance, tell me more about your assessment of the latest situation, particularly when we are going into a year that's going to be difficult all over the world. What does that mean also for the local government debts in China?
Well, you need to understand one of the key words is they're very efficient. If you have, shake hands with them. And after the central government provided the KPI and direction, they will issue all kinds of policies until they meet the target. We've been seeing many local government is working very actively. If you go to Zhejiang province has been sending up the delegations to Japan, to European Union, and to try to rebound with the customers and clients. And what we know is that they have already signed many new deals with them. So to guarantee the main part of the Chinese export of the 2023. And also you've been seeing the central government has been resounding a tune for the platform, digital economy. And we've been seeing the government agreed the Ant Finance, which is one of the tycoon in Chinese consumption finance, agreed to expand their capitalization, agreed to increase the stake shareholder, and probably you're going to see Ant Finance is going to be going through the process of the listing in Chinese financial market. It's going to be sure, and that's going to be a very important sign or beacon for the rest of the platform economy. And also the government itself is trying to, they made a very important comment. It's called, everybody should share the benefit from the digital economy. Why is that? It's because your information, your making of the short clips of video, they used to be your property and you're not making money out of it. Now the government wants everybody to join in part of it, can make money out of it. And this is going to be our future part of the income for everybody. So I think I'm very confident for that because we have already been seeing signs of that.
All right. Before we wrap up, we have seen those opinions about of course, we would love to see China's future growth because we're going to have also a piece of pie in it. There's another one that has been debating for some time, saying, you know, we should manage China's rise. Well, it's debatable as to what manage means. However, recently, just over the past few years, we have seen talks about, let's just make sure China is not going to grow. And that is a very interesting point I would like to raise with the two of you, since you are observing situations from outside China, that how much do we need to be sophisticated in understanding how our lives, everybody, can be better? What is the basis of understanding this? What will make our lives better?
Well, I would like, it will be beneficial if you have understood on this question itself, because it's a huge question.
Yes.
Obviously, nobody in the world has a problem with China's economic growth. Everyone wants China to grow as such. But the questions remain about the rise and the political rise and the power and the consequence of that. So we are happy with China's economic growth, but the world and India included, we are not sure about the consequence of that. The premise of peaceful rise of China are out of the window, and that is what the world is concerned about. And that if China can answer that question to the world, to itself, what it really wants to do by being a powerful country, then I think we'll have a better future as well between India and China, and between China and the world as such. So no one really doubts about China's economic growth. Everyone wants it. Everyone has benefited and will benefit from the future consumption growth in China as well. But again, its implication on the power equations in the world and in Asia in particular, that is what keeps me awake. Some days, as such. Yeah.
Go to you, Professor Hoffman. Your thoughts about these talks?
Well, look, this is the crucial question for this century, really, on how to manage a rising power such as China, and how to give it space and at the same time stick to your values, if you want. That's what the rest of the world, or at least the Western world, that has been, if you want, the biggest architects of the world order, are thinking through. I think that the atmosphere has changed as China did well and the West did less well. And there's lots of attributions, lots of assumptions on what went into that. But to some extent, politically in the West, it became increasingly fashionable to blame China and to see China much more as a threat for employment, for jobs, for growth in the West. Whether true or not, I believe that this is still early days. And it's very hard because you'd only do that once every 100 years to deal with an incumbent hegemon and a rising power to, if you want, reshape the world order so that everybody is comfortable in that. I think that's the debate for the next 10 years. The great risk is that debate stops. So I think keeping that dialogue going on what needs to change so that the economic benefits of integration can continue or resume, that's the debate for the next 10 years.
Great points there. Bert Hoffman, Avinash Godbole, Ju Qiang, gentlemen, thank you. And that's all the time we have for today. If you'd like more, search